What's up, you guys? Zoeb here for OneGlanceTrader.com, and in this video I'm super excited to be releasing the OGT RSI Sensitivity Indicator, and I truly believe that this indicator will give you powerful insights and an edge to your trading as it helps you identify which pairs will suit your trading strategy. Now, before we begin, I would really appreciate if you could click the like button and the subscribe button, as it helps out my channel so much, and I'm nearly at 10,000 subscribers, so every subscriber counts, so please take some time to do that. Now, when we look at trading strategies, there are generally two schools of thought. That is, one of them is mean reverting, so counter trend trading, and the second is momentum trading, or aka trend trading. And once you've decided which trading strategy you want to deploy, the next question you normally ask yourself is what pairs should I be trading, and what time frame I should be trading. Now, this will generally come to a decision based on how much time you've got in front of your charts, the spreads of your broker, etc., etc. However, one thing that is true is that not all pairs move the same way. They have different volatilities, different mean reverting properties or trend trading properties. And as a novice or a new trader, you might not know which pair actually works best for your trading. So what do? You normally do visual back testing on a handful of pairs and decide that this pair is the right pair to be trading my trading strategy. But what this RSI sensitivity indicator does is that it utilizes RSI data as it's an oscillator, as it's kind of used for overbought, oversold levels, which traditionally are kind of used for mean reversion trading. It uses historic data to calculate whether a pair has mean reverting properties or momentum trend trading properties. So that will help you in your trading to decide which pairs I should be focused on or are more likely to best suited my actual strategy. So how does this indicator actually work? So what it does is it utilizes the RSI, which you can kind of see I've got on the screen on the Euro Aussie dollar 1 hour chart. And traditionally you use the overbought oversold levels of 70 and 30. So the way that you're taught to use the indicator is that when price hits one of these extremes, so over here for example, price as is, or the RSI has a reading above 70, that price is overextended or exhausted and therefore needs to come back and revert to the mean. And as you can see here, it reversed and went all the way back to this kind of level over here. You've got another example over here where price was overextended and the RSI is above 70, and then what happens? Price then mean reverts down. Now this doesn't always happen, but we're probably assuming that most of the time that this does happen, and this is why you have money management inside your trading strategy. So then if price does continue to go on a very aggressive trend, as it sometimes does, you've got your money management terminology in place to kind of help you manage out that trade. An example of that is just here actually, where you can see the RSI became oversold at the 30 level. It did mean revert to a slight pullback, but then continued to go down. So depending on what your kind of strategy is, you could have got stopped out of this particular trade if you had a mean reverting strategy and you had just stop loss underneath there. So how can we use the RSI to help us understand whether the euro, Aussie dollar in this example has mean reverting properties or momentum trend trading properties? And the way it does that is, if I open up the settings, is it scans every time the RSI was overbought or oversold. And the scan period you can do anything from a day, a week, a month, a quarter, 6 months to a year. So leave it as a week for a second. I'll talk about the candle range in a second. And then again, the default is the standard RSI, as you see on most trading platforms: 14, close price, overbought at 70, oversold at 30. And what this candle, and again, is completely customizable. And what the candle range does is it counts the number of bars after the bar that took the RSI into overbought or oversold conditions. And what it does is it counts that number of bars. So in this example, 5 bars. So if you're on the hour chart, it's 5 hours, 1 minute chart is 5 minutes. And it sees whether the close of the fifth bar is greater or below the bar that took it overbought or oversold. And in an example, let's look at this example over here. So which bar was it that took the over? Yeah. So this bar here closed and it took the RSI at 71. So what it does, it counts 5 bars across, 1, 2, 3, 4, 5, which is this bar over here, and it looks at the close of this bar. So this bar closed below the bar by about 10 pips of the bar that took it overbought. So therefore, the data calculates it as a mean reverting outcome. And what it does, it counts every time the RSI goes overbought or oversold. So if we take this example at the moment, RSI went oversold at this level here. It will count 1, 2, 3, 4, 5. So it counts the fifth bar, which is this bearish pin bar over here. And in this example, that the close of the fifth bar is below, well, it's above actually, it's above the close of the bar that took it oversold. So in this example, even though it continued to go down, it has referred to it as a mean reverting outcome. So if we take the last two outcomes over here, this has been 1 for mean reverting and 2 for mean reverting. So that's how it calculates it. And what you can do in the settings is you can change the number of bars to 10 bars, 100 bars, 1 bar, whatever you want. The default is 5. And again, this is just my kind of view and how I use the indicator. And you can experiment because you'll get different outcomes every time you change the bars, change the scan period, or the overbought or oversold levels. So once you've set your criteria, let's say we're going to scan the euro Aussie dollar for a week for all overbought oversold conditions at the period of 14, 70, 30, and it will look at the next 5 bars and to decide whether it's overbought or mean reverting or momentum trend trading. And when you click OK and you close it, what it does, it has already run the data. And the way you get the data is if you open your data folder and file open data folder, select MQL4, select files, and then you will see that it gives you your output here. Now, one thing to bear in mind is that when you do the scan, it just tells you what pair and what time frame. It doesn't matter what time frame you run the scan because it's calculating all time frames anyway. So when you open it, it brings up this this notepad file, and what it does, it gives you the details that you've done. So if you ever wanted to go back and check, compare kind of text files and stuff, you've got the conditions there, what the date range it's checking over, and the time, so your broker time that you ran the actual scan itself. And what it does, it shows you all the time frames. It then shows you how many times price crossed the overbought or oversold the 70-30 levels across all the time frames. It then tells you after the fifth bar whether or not it was above or below, depending if you're overbought or oversold. So whether it was a momentum outcome or a mean reverting outcome. And then it splits it all by time frame and then gives you an overall total for the scan period you're doing. So if you ran this for a year, and we'll do that in a second, it will give you a different outcome. But what you can see here is that it's telling you that according to the conditions that we've done in, that the euro Aussie dollar over the last week has mean reverted or has mean reverting properties, 61% of the time. So therefore, in the current market conditions, it's safe to say that if you've got a strategy that is mean reverting, one of the pairs that you want to be looking at is the euro Aussie dollar. Or on the flip side, if you've got a trend momentum kind of trading system, it's probably safe to say that this is one that you probably want to avoid and go look at another pair. So you can imagine how powerful that is. Now, the caveat is one thing that this indicator doesn't tell you is it just tells you whether or not that the fifth bar in the example we're showing was above or below the closed bar that took you overbought or oversold. It doesn't measure the actual pip distance. So it could be 1 pip above or below, or it could be 1,000 pips above and below. And we can talk about this inside the next version. But again, I think it gives you a good indication on which pairs to focus on and which pairs to avoid. And also what it does is actually gives you some interesting data in terms of from a time frame perspective. Now you've got to bear in mind if you're only doing a week, and obviously you're going to get more crosses overbought and oversold levels on lower time frames than you do on higher time frames. So, but you can see here that you know on the M1, it's above 50, below the average, but above 50. But if you look at the higher time frames, they're all pretty much above the average by the M15. Yes, you've got less data, but again, if you're going to be trading this system, you probably wouldn't be looking at the M5 or M15 kind of chart. So if we run this scan again, but we do that on the yearly data. Let's see what that looks like. Now, one thing, and again, I might have said it already, but every time you run the scan on the same pair, it's going to overwrite the previous one if you do it on the same time frame. If you do a different time frame, then it won't overwrite. It will create a new file for you. So just kind of bear that in mind. So now it's rerun the data again. And now you can see it gives you more data because obviously it's a longer time period. But again, it's kind of indicating to you that over the last year that it has a tendency to mean revert, but in current market conditions, it's mean reverting more than the kind of yearly average. So therefore, this is a strong strong pair to be considering as part of your mean reverting strategy. So if you're using my RSI MTF EA, for example, which again you can download for free, links in the description. I'll do a tutorial in the top right hand corner. This would be a pair that you would definitely want to backtest on because it is showing mean reverting properties on there. So now if we have a look at a different pair, for example, the USD JPY, and again, I think I've got this on standard weekly 5, blah, 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 blah. We run that. What you'll see now is created another file for the USD JPY. It's super quick, very straightforward. You can see here that this pair also is showing tendency to mean revert. But if you're only going to trade one pair and park spreads for a second, depending on your broker, would you rather go for the euro dollar, the euro Aussie dollar, or would you rather go for the USD JPY? So again, this is kind of helping you decide which pairs to focus on. You may want to focus on both. And once you've honed in on a few pairs that are showing the kind of, properties that you want it to show across the different kind of candle ranges and things like that, what you can do is then try different candle ranges. So we tried 5 in this example. If, for example, I don't know, let's just go and try 15, because again you might have a very big reward to risk on that one there. So if we do that there, you can see now that it's done a very different outcome. Still mean reverting, which is good, because if you've got a mean reverting strategy over the longer term bars as well. So again, it's still showing that kind of aspect. And I think the bit that is important is trying to understand the difference between them, because these 77 momentum trades could be 1,000 pips, and this mean reverting could only be 20 pips, for example. So that is a small caveat to this, and I'll look at that in version 1.1. But I think it's a good start or a good indication, especially again if you're doing scalping on lower term time frames or things where you're using the M1 and M5, which will give you the most data. Will give you that. Just very quickly, I'm just going to do this for a year to see if that makes any difference whatsoever. I think I've closed that one down. Files. and again over the year where it's even more tendency to mean revert. And again, I've done this for majority of the pairs, and I've very rarely found a pair. It has happened a few times though where this momentum is above 50. I get a lot of 48, 51, 52 or whatever, but I've seen the mean reversion as high as 74% over 6 months. I can't remember what permutation I had on there. So, whether, even though that you may not get momentum above 50% very rarely on the pairs when you go test this out yourself if you're a trend trader. What it does though is then makes you avoid pairs that are very high in the kind of mean reverting category. So this, I want you guys to give me a comment down below on what pairs you're currently trading, and what the outcome is on your side. Give me some feedback and we'll get that looked at into version 1.1. I really hope that you've enjoyed this video and really enjoyed this indicator. Again, links in the description, absolutely free. Everything I give you guys is absolutely free. So please like, please subscribe. I've also got my strategies up in the thumbnail, so please look at that, and I shall see you guys in the next video.